Alibaba stock is exploding. In just the last month, it's up more than 40%. And if you look at the whole year, it has already more than doubled. After 5 long years of disappointment, crackdowns, and falling share price, it finally looks like the company is seeing a real comeback. But here's the big question. Is this just the beginning of a massive recovery, or have you already missed your best chance to buy? In today's video, I'm going to break it all down. We'll look at what's driving this huge rally, dive into Alibaba's financials, and of course, calculate its intrinsic value to find out whether it's still a smart investment right now. Now, before we dive into the video, I would like to thank everyone who's supporting the channel by clicking the subscribe button. We're actually getting close to 1,000 subscribers, which is a huge milestone and shows me that people are actually enjoying my videos. So again, thank you, and on to the video. Now, what's really driving this surge in Alibaba's stock price? The short answer, a mix of big picture momentum and company-specific breakthroughs. Let's start with the macro backdrop. China has been rolling out stimulus measures to revive its slowing economy. Earlier this year, President Xi Jinping met up with China's business leaders, including Jack Ma, in what many saw as a symbolic green light for the Chinese private sector. For years, Chinese tech faced heavy regulatory pressure, but this was a strong signal. Beijing is back to supporting its business champions. On top of that, we can add in the hottest theme in global markets, artificial intelligence. Until recently, the AI trade was dominated by US giants like Microsoft, Google, and Nvidia. But that kind of shifted when the Chinese startup DeepSeek stunned the markets with its ultra-low-cost AI chat model. Suddenly, investors realized that China can also play in the AI race too. And Alibaba has positioned itself at the very front of the story. At their annual conference, the CEO Eddie Wu made it clear. Originally, they planned to spend around $53 billion over the next 3 years on AI infrastructure. But now, that number is going up without an official cap. In other words, Alibaba is betting everything on becoming the global AI leader. And the results are already showing up in the numbers. Alibaba's Cloud Intelligence Group, home to its cloud and AI business, saw revenue jump of 26% last quarter. Even more impressive, AI-related revenue now makes up a fifth of external cloud sales. It has been growing in triple digits for 8 straight quarters. Now that is some serious momentum. On the product side, the company unveiled Qwen3 Max, a trillion-parameter language model that rivals the most advanced models in the world. They're also pushing into AI chips, onboarding China Unicom as a major customer. They're even partnering with Nvidia to integrate robotics and physical AI development tools into Alibaba Cloud. And this isn't just a China play anymore. Alibaba is aggressively expanding data centers overseas. In Brazil, France, the Netherlands, Japan, South Korea, Dubai, and more. They're directly targeting markets dominated by US tech giants. And for investors, the story checks every box. Strong macro tailwinds from China's stimulus and policy shift, explosive growth in AI revenues and infrastructure spending, and cutting-edge models, chips, and partnerships that show Alibaba isn't just catching up. It's competing. And that's exactly why Wall Street is taking notice and the stock price is surging right now. Now, all this sounds exciting, and it definitely explains the recent rally. But as value investors, we know that a good story doesn't always equal a good investment. So the next step is to dive into Alibaba's financials and see if the fundamentals truly support the hype. So Alibaba is currently trading at $188, and it has been on a tear in year 2025, going up more than 120%. They're trading at a 22 price-to-earnings ratio with a forward P of 23. Their return on invested capital is surprisingly not that high, it's only 10%, but in my opinion, if their investments succeed, this could go much higher. Now, this is a thing we really like to see. They have more cash on hand than debt, actually more than $22 billion of cash on hand. This puts them in a strong position where they can invest in their future and not be scared about bankruptcy. Now, looking at their revenue, it has been growing steadily over the last 10 years, even though we see the slowdown in the last 3. Net income is kind of all over the place, but we're still seeing a positive trend. Now this is their shares outstanding, and this is a thing that I really like about Alibaba. In 2021, their stock price started to drop significantly, and Alibaba reacted in the best way possible. They started buying back shares aggressively. They bought back more than 10% of their shares outstanding in just the last 4 years. Free cash flow shows even better growth than net income, which we always like to see. Now yes, the last 4 years have been all over the place, with this year being one of the lowest in the last decade. But that is simply the cost of investing heavily into their future. So I do not see this as a red flag. Actually, I see it as a positive. Now this is what analysts are predicting for the company. In the last 12 months, Alibaba did $138 billion in revenue, and analysts predict it to grow steadily to around $214 billion in the next 5 years, which is around 10% annual growth. And in my opinion, if their investments into AI and cloud succeed, this could be even higher. So Alibaba's financial position looks solid. The company holds more cash than debt, giving it flexibility to invest in growth, and it has been buying back shares aggressively at low prices, which is something that benefits the long-term shareholders. Yes, growth has slowed compared to the boom years of 2020 and 2021, but profitability seems to be recovering. Free cash flow has been trending lower, but this is largely due to massive investments into AI and cloud. And these investments could massively raise their returns in the future. Overall, Alibaba isn't back to its peak performance just yet, but its balance sheet strength, buybacks, and investments into the future suggest the fundamentals are strong enough to back up its AI-driven ambitions. But of course, strong fundamentals and big ambitions are only a part of the story. What really matters for us as investors is whether the stock is trading below its fair value. So let's run Alibaba through the intrinsic value calculator and see what the numbers tell us. So in the last 12 months, Alibaba did $8.53 in EPS. And let's say that we will grow at around 10% in the next 5 years, and we will slow down and grow at 8 for the 5 years after that. Let's keep the terminal multiple at 15, and for a 10% annualized return over the next decade, you could pay $191 for the stock today, and it's trading at $188. In my opinion, these are normal base case assumptions, and they are fairly realistic. Now let's be more pessimistic. Let's say they will slow down and only grow at 5% for the next decade. Suddenly, the stock seems overpriced for a 10% annual return. In fact, it looks like it would bring closer to 6% annualized return over the next decade if they only grow at 5%. Now, in my personal opinion, 6% annualized return over the next decade for pessimistic assumptions isn't that bad. Now let's do a more optimistic calculation. And let's say for the next 5 years it grows at 10%, and then their current investments start to bear fruit and they start growing at 15% for the 5 years after that. In my opinion, this kind of high growth rate deserves a higher multiple, so let's give them a 20. And for a 10% annualized return, the company seems significantly undervalued today. In fact, I just adjusted the numbers, and it seems that if these assumptions come true, Alibaba could return closer to 15% annualized returns over the next decade. And to be honest, in my personal opinion, if Alibaba's investments succeed, these assumptions could easily come true. So where does this leave us with Alibaba? The company has had a rough few years, but it's now investing heavily into AI and cloud to secure its future. From massive infrastructure spending to cutting-edge models and chips, Alibaba is clearly aiming to compete on a global stage. Financially, it's in a strong position. More cash than debt, smart buybacks, and enough flexibility to handle big investments. Yes, free cash flow is under pressure, but that's the cost of building for the long term. And from the valuation standpoint, even after this big rally, Alibaba still looks capable of returning 10% annually over the next decade. And if their bets on AI and cloud succeed, the upside could be much higher. Now, for full transparency, I personally own a fairly large position in Baba, and I'm not selling, but I'm also not adding more at this point. Now, if you're looking for companies that can bring higher returns, I'll be releasing a video with my top 3 stock picks for October next. So make sure you subscribe if you want to see that when it comes out. Now, if you enjoyed the video, consider clicking the like button. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.